Welcome everyone, and thanks for joining the Wealth Today's digital roundtable on future onboarding in financial services, which has proven to be an extremely important topic for the financial services organization and otherwise. We would like to thank our sponsor Cedar Rose for supporting this discussion and also lending their intellectual depth to this very critical discussion. We have a fantastic session with us, and I would like to welcome Anton Masad, CEO Cedar Rose, Christos Christou, Group Chief Compliance Officer, Lulu Financials Holding Limited, Ken Coghill, Director Innovation and Technology Risk Supervision, Dubai Financial Services Authority, Lawrence Paramasivam, Senior Executive Director, Policy and Legal, Financial Services Regulatory Authority, Sachit Amrasekara, Director, KPMG Lower Gulf, and the discussion will be moderated by Bhavin Shah, Managing Director, True North. The discussion can always be enriched by interactions, and we strongly encourage you to ask questions to the panel in Q&A box. If the questions are not addressed during the discussion, we'll address them towards the end of the session. We aim to bring you more quality discussions like this. If you have any suggestions on the topic to improve upon, please feel free to write to us. Over to you, Bhavin.
Thank you, Hitesh, and welcome everyone, and a warm good afternoon from Dubai. We have a very interesting topic today, the future of customer onboarding in financial services. A lot has changed in the world in the last few years, as we all saw. COVID to pandemic to focus on fast digital, the changing customer needs, the technological reforms, the regulatory reforms, and last but not the least, even the focus of banks on their own performance and cost to income ratios. It's a very interesting topic. It kind of connects almost everyone in the sector as well as in our community. Technologists are interested, market participants are interested, regulators are interested, and advisors are interested. So it's quite a unique topic and very important one to discuss. I think what we have today also is a very esteemed panel, a combination of all of them. We have regulators, we have market practitioners, we have technologists, and we have advisors all coming together to enrich this discussion. What I would request all of you is, as Hitesh has mentioned, please put in your questions in the Q&A box or the chat box, and we'll try to address them as the conversation progresses. Overall plan is to discuss this for about 60 minutes, leaving last 30 minutes purely for Q&A, but we are pretty flexible as to how the session will go today. Special thanks to Wealth Today, Hitesh, and Cedar Rose Antoine for sponsoring this. Before we start, let me start with my quick introduction, followed with all the panelists. Each one of them will introduce themselves, and then we'll go to the key topic. So I'm Bhavin Shah, have been in the region for about 15 years, advising financial institutions mainly, have been partner with Deloitte and Roland Berger in the past. In 2020, I started my own boutique consulting firm, True North. True North today focuses on special situations in financial sector. We advise clients across restructuring, across regulatory remediation, transaction, and forensic. We specialize on focusing on financial institutions, governments, as well as regulators. That's our primary area. With that, I'd like to invite Lawrence to introduce himself, and then we take it from there.
Great, thanks, Bhavin. And my also thanks to Wealth Today and Cedar Rose for organising this event. My name is Lawrence Paramasivam, and I head up the Financial Services and Regulatory Authorities Policy and Legal Division. I started in the role about 6 months ago now, and I've been involved in and having various legal policy and supervision roles within Dubai and Australia over the past 25 years. And my main areas of focus is very much on financial services regulation, conduct of business, and financial crime related risks. I'm looking forward to the panel discussion today.
Thank you, Lawrence. Antoine, you are next.
Thank you very much. I'm Antoine Masad, CEO and co-founder of Cedar Rose. I have been involved in research and investigation since 1991 and focused in the past primarily on retrieving and providing data on entities from the MENA region, which is known as a hard to reach to place when it comes to information and transparency. I have strong passion for the region, and having traveled since the young age of 18, when I left my home country, Lebanon, I saw the difference between the standards of living of Lebanon and those other countries like the UK. This made me more and more determined to enable trade, credit, and finance to those developing countries to better the standard of living of my fellow countrymen and women which I strongly believe that they deserve. Trade, credit, and finance require information to enable decision-making. Not just any information, but reliable and up-to-date information. The changes that I have seen recently and that I know will be the driving force behind customer onboarding are: 1, regulatory requirements, and 2, technology. Of course, while offering an excellent user experience to the customer, and none of which was hardly considered back in 1991, by the way. Thank you, and look forward to this event.
You are one of the pioneers, technologists, before even the fintech became fintech. So, great
Absolutely.
to have you on. Great to have you on board, I guess. Ken, if you can please introduce yourself.
Sure. Thanks, Bob, and thanks to Wealth Today for the invite to speak. I'm happy to be here. I'm Ken Kyc, and I'm the head of Innovation and Technology Risk Supervision at the Dubai Financial Services Authority. We're the independent regulator for the Dubai International Financial Center. And my role, I lead the DFSA's Innovation Technology Risk programs. That means I oversee our Innovation Testing License Program, otherwise known as the Regulatory Sandbox. And I oversee the supervision of all innovation technology-enabled financial services, such as payment service providers, crowdfunding platforms, automated wealth management, distributed ledger, technology-based product offerings, as well as cyber risk supervision across all of our institutions. I've been in the region for 9 years, approaching 10 now. I came here from Chicago, where I started my career over 20 years ago as a equity options floor trader on the Chicago Board Options Exchange. Did that for a number of years and then moved into regulation from there. Managed a team of market conduct investigators at the exchange for a number of years before coming to Dubai. So looking forward to the discussion today. We have a good mix, as Bob pointed out, of a private and public side on the call. So looking forward to deepening each other's understanding of the other's expectations and challenges in this space. Thanks, Bob.
Thank you so much. Thank you so much, Ken. Christos, if you can please introduce yourself.
Thank you, Bavin. My name is Christos Christou. I am Greek from Cyprus, and I am in Dubai the last 8 years. Last August, I closed 8 years. I believe I'm the only practitioner compliance officer in this panel, and that gives me great pleasure to introduce and defend the work that we do with the help of the rest. That is, we follow the regulators, and of course, we use the services of the other parties that are part of this panel today, and very happy and very excited in order to discuss with you guys all these matters. I've been basically I've been a banker for 23 years in my previous engagement, and the last 8 years, which makes it 30 plus, 31 plus. I am the Group Chief Compliance Officer for a non-banking financial services, the Lulu Financial Holdings, as we call it, or as the Lulu Financial Group, in the MENA and APAC regions. So if I join together the European experience in the banking sector plus the GCC and APAC, or the Middle East and APAC region experience in the non-banking sector, there are so many similarities, so many requirements, so much use of technology and technological advancements that both sectors use, and they do the complete financial services providers, especially in the sectors of payments and lending and trade finance, which are major risk management activities that they need a lot of support. I'm willing and I'm very, very much interested into hearing from the regulators first, but from also the practitioners and the consultant sector, and discuss with you guys our problems versus the problems that are created by you or can be solved by you. Thank you very much.
Thank you, Christos. Sach, last but not the least, but please introduce yourself.
Absolutely. So again, thank you very much for inviting me here, Hitesh. Extremely delighted to be here. I'm Sachit Tamarasekar. I'm a director within KPMG's forensics practice. I specialize in the financial services sector, but with a specific focus on the financial crime solution that we have. I've been with KPMG for about 3 years, but prior to that, I was with another bank and another Big Four across a number of different jurisdictions. So I'm hoping to bring in a little bit of that global insight as well for this discussion today. We've obviously been working with a number of organizations over here and globally, advising them, supporting them through changes to their customer onboarding program. So my idea is to try and bring in a bit of that color, a bit of the issues that they've faced in digitization, their customer onboarding practices, and also some of the other solutions that we see, such as the shared KYC utilities, etc., that seems to be coming on board.
Sach, while I have you, if you can throw a bit more color on the trends that you are seeing in customer onboarding today across the region and globally.
Well, I think digitization is the key word that everyone's using these days. And I have to say that it's not that everyone's got there quite yet. And I mean, as an example, I got a mortgage done about a year ago, and I still had to go to the bank, sit there, sign a lot of the papers. But if you look at some of the other banks out in, say, the UK, for example, Monzo Bank, for example, have complete digital onboarding end-to-end, even for their corporate customers. That's coming to the UAE. I think we're going to see that in the next months, if not next year. But that's the trend that we're seeing, really focusing on the different customer sectors and taking away that pain. So customer journeys is one of the key things that banks have been focusing on for the last few years.
Awesome. Ken, you also see a lot of emerging technologies through your role, right? And is there something amazing, wow, coming our way that you see today, which perhaps the market doesn't see, but could be potentially game-changing in this space?
Interesting question. I'd be surprised. I don't know if it'd be a problem if I saw the wow before all of you saw the wow coming or not. But the things are just kind of put some support behind there, where I see the trend is going certainly toward digital, and it's driven much by more by the clients. Clients want faster onboarding. They want it more seamless. They don't want to have to go to one bank and provide all this documentation, then go to the next bank. They'd like to have it all centralized in a way, whether that's done through national identity types of schemes, or the use of distributed ledger technologies to centralize the sharing of the information in a way. So nothing that's really earth-shattering that I think anybody hasn't seen yet, but definitely a push, and it is coming from the clients, from all the feedback we get from the institutions that we supervise. It's the clients that want this. They are tired of carrying documents and producing them. And from our perspective, that's understandable, and there's no real issue from our perspective to digitize that and do it digitally. It still comes back to the fundamentals still exist. Can you do that? Can you use an alternative form of identification and still achieve the same outcome of understanding who the client is and doing the diligence that you need to do in the background?
And I think, I personally believe UAE has done a fantastic job on the digital identity side. UAE Pass and the seamlessness with which it functions across various things is unbelievable. I recently did a real estate transaction, and I realized that as soon as you put UAE Pass, you absolutely get every piece of information, and it's fantastic. Same with health app, same with everything. So yeah, it would be good to see a similar solution in financial services space. Lawrence, you and I spoke the other day, and you had some recent amazing experience on this front. I mean, it would be good for you to share with everyone.
Yeah, sure. I mean, I sort of echo what Ken was saying, just in terms of, from the customer experience side, it's really driving more smarter, more convenient ways to be onboarded. And I think I was just sharing the fact that I've just moved recently from Dubai to Abu Dhabi, and I needed to connect with a Tisilat for a residential place. And I had a call from a contact at Tisilat and said, look, can you meet me downstairs? I said, I've only got half an hour. This will have to be quick. Went downstairs. They were using a particular device by an Australian company. I think they're called Grabber. And basically within about 10 minutes, through the use of my Emirates ID and various other biometric and things, I was onboarded as a customer. No paperwork and other things required. And that I guess the telecommunications industry is very sort of advanced through this, and there's definitely a number of ways that the financial service industry is going to be able to leverage off a lot of the sort of benefits that have been gained there.
Awesome.
If I may add in there, I think solutions like Grabber, where you're able to verify your face to the source document very quickly is really important. But also there's other solutions coming in that also verify to government databases, etc. And that's the next step around that solution, which is also going to be very interesting to see.
Yeah, and I think, Antoine, that's exactly what I wanted to pick up with you. You have been in this space. You have seen multiple governments, multiple regions, and multiple institutions. It's not just about identity, right? The information is way beyond that. So it would be good to know your views as to what you are seeing across the world now and what you believe would be the next after this.
Sure. Thank you, Bhavin. Very interesting indeed, times we live in. So in my opinion, like today's client onboarding requires obviously strict adherence to meeting regulatory and legal requirements, and primarily so for the financial institutions to avoid fines, licenses being revoked, with an emphasis on fast and efficient processes. Not only to conduct best practices during the onboarding process, actually, but also during the lifetime and life cycle of the account or the client thereafter. Why fast and efficient? Because today clients want and expect to be able to open an account or sign up to a service online, remotely, and anytime 24/7, more so than in person. Due to the pandemic, partially, but also because of the rise of the fintech, financial technology firms, including challenger banks, digital wallets, money transfer applications, and so on. While doing so, the customer also expects the onboarding process to take seconds or minutes, not hours or days, and certainly not weeks or months like the cases have been in the past.
Awesome. Christos, your firm, traditional money exchange business with shops all around, people walking in, to now moving to a Lulu Money kind of a solution, and the kind of rise that we have seen you guys have been doing. You have been almost pioneering the digital wave when it comes to at least the money exchange side of business. How do you see the trend of digital, and especially onboarding of customers in your segment? How is that changing? And what are the challenges you are facing as well?
Thank you, Bhavin. I will take it a little bit more literally. First of all, digital onboarding, not in the sense of fully digitalized from end to end, has been around the industry and financial services since a long time. I remember back in my banking experience, in my banking job, we had some kind of, scanning, storing, transferring data, images in order to verify. And therefore, it's an evolution, basically, of the already in place ways of attaining or retaining data for your customer in order for you to do the onboarding and the KYC. But from a compliance perspective, for us, there are 3 steps. Step number 1 is capturing of identity or capturing of data based on the valid and published, regularly published or regulated publishing of data. Number 2 is validation. And number 3 is authorization. The second and the third, still we are a way ahead in our cases, because validating data in many countries that we operate is executed real time online. And that's good. That's what the banks cannot do currently in such a way to capture all the types of the products that they sell. You cannot get a loan or a mortgage of 2 million or 3 million dirhams with just uploading an ID, uploading one passport or whatever, and then they will tell you, fine, come and pick up your money. In our sector, in money changing and remittances, basically, we say it's okay because we can identify, we can verify, and we can approve any kind of using the biometrics in order for you to do a transfer from your bank account, which is cashless, to any bank account, which is also cashless. So that trip, that money trip, is easier in our case than in the normal banking sector, which have a lot more wide range of products that they offer. And that's a big difference there.
Christos, I'll put it in a counter argument there. So look, product specifications and approval, suitability of a client, absolutely understood. It's still a bit more complex and we need much more sophisticated tech solutions. But specific question to both you and Sach to answer, and before I take regulators' view on this, what we are seeing today is that, especially in the banking world, collection of information is still has gone digital. However, the validation is still very physical. There is still a huge demand across all banks. I would be happy to know if there are one or two exceptions also. You still need to have a vetting signature on the form, and there still needs to be some form of signature on the documents copy that you submit, right? And that is not going away, which we have seen changing in all other sector except banking per se. Is there a specific reason why it is so?
Sajid, do you want to take it up, or I can take it up?
Absolutely. No, I can talk. I think this is something that's changing, and the change is coming very quickly. And even things like one of the questions that's out there is about you still need to have a physical verification. Actually, there's solutions that are coming into the market that I'm aware of that banks are going to adopt in the next, let's say, 6 months, that will do the liveliness check. So it'll ask you to move your head, nod, etc., and then you do that. And that's essentially the same concept as doing a liveliness check by a physical meeting. That's done through an app, that's done through a bot, an AI solution that understands and recognizes that. I know that some of the solutions for the banking industry is a little bit behind some of the other sectors. But that's simply because I guess banking is a little bit more of a conservative view around these things. But that is definitely where it's headed to. I work with a number of banks that's really looking at using the data that they have to actually understand what's high risk and saying, actually, let's just go do all of the things that we've been traditionally doing, which is the highest level, let's say, of verification to the high risk customers, but actually look at most of them from a data-centric view and say, actually, 90% of my customers are actually quite low risk or medium risk. Let's roll out the digital channel. So I don't think I think there's a delay, but that's just, I think, the nature of what banking is. But I think that change is maybe a year away. I think that within that period, a lot of these digital wet signatures, etc., would change. The need to have a physical meeting would change.
Sajid, I will do the devil's advocate here. I will say a few things about what I know from the banking sector, and I will tell you what is applicable today. This described very well way of identifying and verifying the originality of the identification document, whether you link towards a data center like the UAE Pass or the CPR in Bahrain, or you have this in Malaysia, you have this in Philippines. You can verify from different. Saudi Arabia is also connected online in real time, and Qatar the same, in many other countries of the GCC and APAC, from what I have experienced. That's the easiest part. We do it already. As Lulu Money application, we already do it. You capture your own photograph, your own video, and there are artificial intelligence that can do that. Banks can, and they are doing it. What we discuss here is what's next, because if you just onboard, it will be easy. But for what reason you onboard? And that's where the banks start having the difficulties. Digital identity is not the only thing that they use. They have to use digital signature. Is there a legality behind this digital signature? Not only regulation, how to regulate compliance-wise and AML-wise, but the legalities of the documentation that they have. They are giving away or getting assets under their mortgage, or getting assets as collateral, or other types of collateral. All those things, all these operations that the banks have, make them delay the full implementation of technology related to digitization of identity and who is dealing with them. That's my opinion. In our case, as non-banking financial institutions, and especially in the money remittance and fintech area where we work as Lulu Money, it's easier. and we have already implemented it. Where there is regulation, it's simple for us. Tac, within 1 week, we implement it. 10 days, 1 month maximum.
I think
Thank you, Christos.
Yes, this was, sorry to interrupt, but this actually was raised by one of the audience, a question, is it going to be expensive for the smaller firms, and would they be left out for the digitization and transformation for their compliance and regulatory processes? Actually, it doesn't need to be expensive for them, nor complicated. Like Christo just said, now is automating the process, which sometimes could be a week to implement or even less. Some of them, of course, going to be complicated, going to take longer. But it is very important that at this particular time in need, a conversation is opened and had with the regulators. Because at this time, when you are turning into digitization, you need to make sure you've got the blessings of the regulators, so it lays the path for a good, sustainable digital transformation for the future. So this is the basic.
Antun, allow me one second. You talked about the cost, and this is what the question was. The cost relate to what type of digitization you want to do. Discussing the customer onboarding process, it's not cheap per se, but it's not expensive also. Whether your volume is 100 or 100,000 or 100 million of whatever you're going to use it, the cost can be spread, and the cost is very low for all types and sizes of the financial service provider. It's the next step that what you said, it depends on the regulation, how stiff, how tricky, how more demanding can be. And I'm not talking that any regulator are trying to do tricks or whatever. I mean, is which way they want to make sure that all the financial services follow a correct way of digital onboarding, digitization. And I think it's time to hear from the regulators what they want, because I'm very curious, to be honest, to understand, especially their way of seeing things.
Thanks,
Bhavin,
Christos.
back to
I guess
you.
Lawrence would invite you to share some views, not just on the topic, but I'm also keen for you to provide your views on digitization at the regulators as well. What are the trends you are seeing, how the digitization is coming, both in the industry and in the regulatory environment?
Sure, no, thanks, Bhavin. Well, I mean, let's just start with the ADGM for a start. I think the ADGM has been very proactive in terms of making changes to its framework to support digital transformation. And just I thought I'd touch upon a couple of examples. Earlier this year, the ADGM issued an electronic transaction regulations law. It's one of the first very complete laws, and very much confirms the acceptance of electronic signatures, contracts, records. And it's not just available for those ADGM entities, it's also potentially available for any parties that opt into the ADGM common law framework through contractual arrangements. So we've been having quite a bit of dialogue with other local entities just to make sure that they're aware and familiar of some of the benefits of being able to rely on that. So that definitely goes to those questions there of whether we always need to continue to rely on physical documentation. In terms of onboarding, again, the ADGM, the FSRA actually issued a consultation paper in June this year on eKYC. And there's nothing too groundbreaking in terms of the consultation paper. What we very much did is really send a message that we're open and we have no issue with the use of eKYC. Our AML framework was anyway technology neutral, but we just thought we would again make sure that our stakeholders understood that we're supportive of the use of eKYC. And this is very much actually in line with both the FATF, the international standard setting body who've issued guidance on digital IDs, but also actually the other authorities here, regulatory authorities in the UAE. In May last year during COVID, there was a joint guidance paper issued by all the authorities just about the acceptance and support and use of RegTech and SubTech and digital ID. So again, I think there's an overall sort of regulatory view that ultimately, as long as the outcomes are there, that you actually know your customer, and you can get that using electronic and digital means. Very much we're supportive of that. And then finally, what I would say is that there's also another piece of work that is still ongoing around some joint guidance on enabling technologies, which again, is another great example of how all the UAE authorities have got together to issue a consultation paper on topics such as APIs and cloud computing and big data, and in particular biometrics, which I think is also very much important and connected to the KYC issue, and just our principles and expectations around governance and outsourcing and record keeping, and just a real principle-based sort of approach, which we hope would allow our stakeholders in the private sector to look through and try to meet our regulatory expectations. I might just stop there.
Thanks, Lawrence. Very insightful. Ken, on the same lines, I would like to understand from you, you see a lot of emerging technologies. Are there specific technologies, blockchain getting discussed a lot in the eKYC space? We have a Dubai blockchain week coming ahead of us next month. Is that an answer to some of the things that we are trying to do here, customer onboarding? If not blockchain, what are the other emerging technologies that you see in this space?
Sure. Well, I think blockchain is going to play an important role, and we haven't seen quite the broad rollout yet, but there's been a number of trials and pilot programs around the use of distributed ledger technology for the sharing of KYC information and documentation, which I think holds a lot of promise. There may be still some work to do in that front, and particularly I think some of the work to be done is the understanding of what problems that can solve exactly. And that goes just for blockchain generally. It was in all uses of blockchain, there was a rush to use blockchain, and now there's more thought being put into what it's actually useful for. But one area, KYC, is one that is starting to show promise in that area, and we haven't seen quite a lot of it just yet. But I think there's more to come. There is a pilot that was run in the DIFC last year on the use of KYC. The DIFC authority has onboarded a platform using distributed ledger technology for the sharing of KYC information. So that is happening. It just hasn't gotten to a large scale just yet. It's one of those things that you want to develop it a bit slower than faster is safer, particularly when you're talking about data and client information as such. We're also looking at it in terms of how can we use that in terms of UBO information as well. When we look at not the onboarding, but when we look at new firms that are looking at the authorization stage they're applying, can we use that technology in that way as well? That's being looked at. There's similar to what Lauren said, there's a new electronic transactions law in the DIFC. So we're recognizing, at least from the regulatory point of view, electronic signatures. And we have new systems in place for reporting where firms used to have to submit wet signatures. They don't have to do that anymore. We accept the digital signature. We're doing that. Now it's not being done through distributed ledger. That's relatively conventional, simple technology, but the move forward to use it and implement it more widely is definitely underway. So I think with distributed ledger, I think I'm expecting to see more uses of distributed ledger in the side of RegTech than on the actual provision of financial services. So I think it has much more promise on the support side and the operational end. I think is my view on it.
More in the form of registry rather than of a transaction.
Yeah.
Fair, I guess. A lot of us believe that might be the first stage for blockchain's real success before we see it across every other thing. Antoine, back to you as a technologist, your views on usage of blockchain for customer onboarding or even AI. A lot of people are talking about usage of AI and algorithms to refine the data points that you get and your ability to predict, validate the information that you are getting. How do you see that and your views on the same?
Bhavin, I'm a great advocate and very big fan of technology and AI. We've implemented this heavily at Cedros for many years, actually. It underpins many of the processes that we follow through with AI, machine learning, ML, which actually has saved us loads of time, cost, and improved our efficiency, while also giving us the competitive edge, if not market leadership in our domain. To some degree, also, we are required to use AI instead of humans in order to comply with certain requirements or regulatory requirements. And one example of this is producing or generating our credit rating or scoring, for instance. We have to use AI in order to avoid errors, as humans are bound to make mistakes for being tired, for being ill, from the lack of concentrations and so on. And they also limit the ability to increase workload. However, having said that, I also believe there will always be, and to a degree, the need for the human intervention, especially to assess situations where AI has not been trained yet or configured to deal with certain situations. On the blockchain side of things, and I won't take too long from everybody else's time, this has already been rolled out. There were some questions about blockchain being a suitable solution in the future. This has actually already been rolled out in many countries by many regulators, even including in the UAE. The government is supporting the blockchain, and there are a certain number of banks and other players that are joining forces together to produce blockchain for KYC and due diligence processes. The future could hold this, and the blockchain could be one of the solutions, but not the only solution. Digitization, nonetheless, it's always going to be at the forefront of what we are seeing, and we're going to continue to see for the near future.
Christos, how do you see this? If all these technologies are coming, what's the future of compliance officer? Is there a human factor here? Do experience count, or tech can take over that as well?
I will again debate on two things. Debate number one: what technology we have today and what we see being developed relates to individuals, physical persons. Mm-hmm. I take from Ken the hat saying, you know, what about UBOs, etc., etc. So my debate as compliance officer is, you give me everything that I can use, and you give me all the technology and all the knowledge and the guidance in order to go for individuals. What about corporates? What about all those things that I have to identify? Is there technology that will validate and will make sure for me that the corporate is what it is and I have to comply with the regulator's requirement? That's debate number one. Debate number two, blockchain. We all know what is blockchain, and we don't know what is blockchain. We don't know how it's used by different people. Again, the debate related to individuals and corporates. What is blockchain going to do related to these other relations rather than the person to financial service provider or to a bank will do? What about the relationship between the two? The relationship between one individual and another individual, one individual and one entity, multiple entities. All these things are the future whereby whether we have technology or not in the digitization of the KYC, compliance will play and will continue to play a major role, because all these artificial intelligence, machine learning, etc., relate on the risk-based approach provided and applied by the compliance officer. And all the banks, as Sachin said, why they don't proceed fast is because their compliance team have their own very, very valid points of not allowing things to move fast. There are controls because, unfortunately, Bhavin, the compliance officer, if does one mistake, that will be lethal for them and lethal for the company. So we have to make sure that the compliance officer knows and follows technology and drives technology as well.
Awesome.
Can I throw some light here, Bhavin, on Christos' comment with regards to the first part of his discussion when he mentions UBO discovery and lookups as stipulated by regulators. We are in the business intelligence industry, and we've been providing technology to access that data to underpin clients' decision-making for many years. In fact, we started doing since 2015 what people today are considering to do next year or the year after. UBO discovery and lookups are mandated by regulators, but the actual information should be provided by the client. in my opinion, financial institutions need to verify that information, even down to the utilization of third-party sources that they deem reliable. Today, UBO's lookups are available through databases and through APIs in real time, covering pretty much all of the corporate entities worldwide. And that can be done on corporate entities. On the other side, you mentioned the consumers, because you hit on the corporate identification and the personal or the consumer's identification. Now, this one is a little bit different, but it's also underpinned by technology through not having to have, say, separate APIs even to different countries or jurisdictions, single APIs for a single repository that would cover 4-point-something billion consumers around the world, majority of the world's bankable population today. And that's also available and have been for several years. This enables people to do decision-making in real time, 24/7 a day, actually, without relying on what you mentioned in the third point, the compliance officer. I have, in my days, and having been in the business since 1991, seen credit analysts and credit managers being phased out and being replaced by technology and AI, to a degree, not entirely. Do I see the compliance officer's role also be replaced by the machine or by the artificial intelligence and technology? Unfortunately, to many, the answer will be it will, but not completely. There will be a great deal of technology because the consumer requirements, the business world that we live in, the world that demands today access to services today more than we did 5 years ago, 10 years ago. We want that, and we want it now, and we want it instantly. In fact, client account opening abandonment is increased 60% in 2020 compared to the year before. Why? Because consumers don't want to click 100 times on their phone or their tablets to open an account. They want to click less times. So all of that, if you want to scale a business, you definitely need technology. If you're not worried about scaling up business and be able to offer consumers or clients services 24/7 and continue to grow the business, then probably it shouldn't be the case. But I think with those fintechs and those disrupting entities like the digital banks and the wallets that are coming through, they're going to compete head to head with old style banks that rely on physical and manual processes, and they're going to phase them out and replace them.
Bhavin, if I may, allow me 30 seconds only to say something to
Christos, I'm
and
genuinely
the
going to allow only
replacement.
30 seconds, yeah? We have 2 topics and 15 minutes.
Yeah. Just the replacement of the compliance officer may not be accurate or whatever. It will not be happen. It will reduce the cost of compliance, yes. But on the other hand, the regulators would like to have the role of the compliance officer more established as a proactive manager and not as a reactive manager that it is now. And that's my opinion. And from what I've seen on the Northern Hemisphere, regulations happening, enhance the compliance officer's role and responsibility, use tools and reduce the cost of compliance, not in the favor of removing it. That's what it is. That's what my opinion is.
Thank you, Christos. Such a quick question. You have worked with some of the global banks inside, right? Not just as an outside advisor. And what we see today is, right, the customer onboarding, in a simplistic word, everyone talks about just the retail banking. The fact of the matter is that banks do many other types of clients. And there are a lot many checks and balances when you go to onboarding beyond identity, right? Like these days, when you fill up a financial institutions form, you're also talking about FATCA, you're talking about CRS, tax residency. There's a bit of a suitability test that happens for you and your risk appetite, so they know what products to offer. And last but not the least, in jurisdictions, especially like TIFC as well as ADGM, you also need to identify whether the client is a retail or a professional, right? How do you see all of these working out with the banks today? And are we going to digitize all of this, or are we just going to remain at the first part, which is simply signing the form? Everything else then still remains as it is.
I think you mentioned that, I've worked with some of the larger global banks. They actually have a tougher problem because they have customers all the way across all of those different areas. If you are a smaller bank who has a focused customer sector, it's a lot easier to digitize. I've actually sort of looked at some of the UK-led digital banks that are in place, and the likes of Monzo and Revolut and things like that. If you take Monzo, for example, Monzo still onboards corporate customers completely digitally. Just off your phone, you pick it up, you type your details in, you scan all your documents. That's able to be verified against the UK government records, and they have the suitability test built in. So you answer your suitability test as you go through. I think a lot of those things that we still spoke about, and a lot of those steps are still quite repetitive tasks, and those are the tasks that will get digitized. Now, I think Chris has mentioned this as well. You don't need to digitize the entire process to gain all of the advantages. You can pick little bits and digitize that, and all of that will add up to be a big advantage and a big cost saving to the banks. Even if it's just filling up your suitability forms. Actually, what does an RM do in that situation? They will go read through, maybe explain a little bit more, tick through, and then you come up with an answer that is fairly rules-based. But I think what you'll see is that sort of thing being digitized, RPA-based digitization for that, but also actually change that to be less binary yes or no, but actually data-driven to say, well, based on a past experience, does a customer like this, does these answers fit that profile? Is the suitability fit for that profile? And be able to bring that sort of aspects that come out of digitization, which is the ability to have data that is high quality and in a way that is usable for this. I think all of that will actually lead to a better outcome for the customer. It leads to cost saving for the banks, etc. So I don't necessarily say that all of this will suddenly become, straight onto your phone and everything's done through AI, through a bot, and you only talk to a bot, etc. No, it won't be that. It might be that in 10 years' time, but at least the foreseeable future, what you will see is digitization in those specific areas that is easily accessible. If you wait for the whole thing, it will never happen.
Perfect. Thank you. Thanks, Ash. Ken, I want to pick your brain there, right? Because I've seen DIFC, DFSA specifically has been a lot of focus in last few years, moving from AML to now focusing much more on suitability and classification that banks is doing and the practices they are following and evidencing the same. Have we seen any major tech introduction in this space within DIFC, DFSA, any banks, institution using technology to now address this?
Well, there are attempts, at least intentions to use AI in different ways to do assessments on clients, gather the data. I do, in my own personal view on this is, and I think maybe this will offer some relief to some of the listeners who are worried about losing their job to an AI. Antoine and Christos made some very good comments on this that I agree very much with. Despite the use of these new technologies to assist with this, that's all they do is assist with it. And it's much what Sash was just saying. They're a supplement to the human. So even though we're seeing more and more, I'm going to call it intent to adopt AI to do this, because I don't know that we've really seen full implementation yet of proper AI. There's more advanced analytics, if anything, more than AI. But even to fully adopt AI will only ever be able to learn from what you told it. It will never have the full peripheral, and a technologist will probably argue with me and tell me you're wrong on that because I'm not a tech person, but to imagine a robot having the peripheral that a human will have, I don't see that happening, at least not in my lifetime. And from a regulator's point of view, and we do hear this sometimes, I like hearing when Antoine and Christos are saying that they don't have that expectation that the robot will take over the human role. There is a role for the human, the compliance role will stay. I do hear it more and more now from typically younger firms who tell me that the compliance role is being handled, the onboarding is being handled through the system. The individual we need doesn't have experience, but they don't need to. The system is designed. And my first question is, who designed that system? And who's going to make sure that system's design remains effective next week and next month? Well, that's where the human skill comes in. That's where the experience still needs to be there. So even with the growing adoption of AI, it's still, I fully agree, it will not be a replacement, at least not in any of our futures.
Yes,
thank you, Ken. I guess very insightful.
On this, sorry, Bhavin. I'm totally in agreement on this. Although I see things from the technology point of view and the way I've seen things before, progress on the credit risk management side. With this particular aspect here, we're looking at, for example, of the AI or the system to do quite a bit of work instead of the humans. So it reduces the workload first, and it will elevate or will request the enhanced due diligence to be conducted by the humans at a particular point. So for example, we've done an exercise, and we have a client that is a GCC government authority. They have gone digital 3-4 years ago, and they were doing processes online through their website. However, the back office people, the fraud and risk management team, was being overloaded by the paperwork, by the emails they have to send. They were printing documents, they were sending emails, and so on. And when we transformed the two pieces only of the whole process, the KYC piece and the compliance piece of it, the compliance checks of it, these two together reduced somewhere between 60 and 65% of their workload. That means it gives their analysts or the compliance officers or risk managers more time to spend on what they do best, focusing on those cases that needs the enhanced due diligence. This is now.
Thank you, Antoine. Sach, I want to go back to you again. I have seen KPMG has just released a report on fintech trends in the region, and they have specifically mentioned about what you see in various geographies as well as various specific sector within fintech. I think it would be good if you can share some insights of that as to what you specifically see on the RegTech as well as the customer onboarding space, if anything more insightful from that report.
I think across the region, I think financial services sector is one of the key areas that's been disrupted, and I guess the disruption has been going on for a few years, but it's still sort of the big players still hold a lot of power in that. But our view on this, at least my view on this, is that is going to change very quickly as we get these fintech players coming in and playing a bigger and bigger part of it. And that's because they would not have come with the baggage that some of the banks have to deal with in terms of how they work with it. They come with a very different view around, gamifying the experience really on the app so that it works really well for everyone. In terms of fintechs that's working on this, they're doing all sorts of great work, right? And it's not just about changing the way things are done and doing the same thing, but it's doing a lot for financial inclusion. It's doing a lot for making sure that people are to transfer money, and especially in this region where a lot of people transfer money back home, that it's done in a more cost-effective way, it's done in a faster way, it's done in a safer way. I think fintechs are really driving a lot of that work around that. It's obviously not to say that actually banks will not be doing the same thing. They will also be doing the same thing, but I think some of these fintechs, especially around inclusion and things like that, are finding it a little bit easier to deal with some of that because they come with a fresh pair of eyes. In terms of fintechs, that's the way I see that going, that they would really continue to forge some of these areas, and the banks would not necessarily follow, but take the best out of that and adapt to fit their profile as well.
Awesome. Thanks, Sach. Lawrence, I want to go back to you and talk to you. You have done a lot of work in the space of data and information. And obviously, when we talk about customer onboarding, then the classic question comes up was about data privacy, what about data secrecy, and what about, more importantly, data sharing that we see today. So it would be great to hear your views of what you see in the region, in ADGM, and wider UAE.
Yeah, sure. Thanks, Bhavin. I mean, data protection obviously has been a very important issue globally and in the region. And obviously, we talk about compliance officers' role, especially working in bigger institutions. They've got to deal with regulations that have cross-border and extraterritorial effect. And one of those areas, unfortunately, is data protection. And and it's an area that's obviously through the EU, through the GDPR, really sort of set a bit of a benchmark. And the ADGM earlier this year issued data protection regulations, very much in alignment with the GDPR and setting up an independent data protection commissioner. We've seen just recent announcements this week, just about Saudi Arabia bringing in a new data protection regime. And really great news also to hear that the UAE, that's celebrating its 50th anniversary this year, announced that it's going to do 50 projects, and it provided, I think, a list of 13, which included a project to review and implement a new federal data protection framework, which has been prepared in consultation with a lot of major tech companies to get their buy-in. So on that side of things, you've got the data protection, which is all about data privacy and protecting information. But on the other side, I think I've been really impressed with all the open data initiatives that have been pushed by the UAE government, whether it's through the Abu Dhabi Open Data Platform, Dubai Pulse, Bionet. I mean, there is an increasing trend to try to make open data sources more available to not just the public, but other stakeholders as well.
Thank you, Lawrence. Christos, your views on data privacy, data protection, given that you operate an entity which is multi-jurisdiction, you have European regulators, you have Middle Eastern regulators. How do you manage this topic, and what do you see as the next thing there?
Always, it has been the essence of multi and extraterritorial way of communicating between the different dots within the financial service transaction. And based on the FAT recommendation 16, 11, 12, there are so many regulations and guidances all over the world that they talk immediately about and simultaneously about the same thing. You transfer, you get, store, and transfer as much data as required in order to execute the customer's instruction. Either this is for a loan or a payment or anything. Right. So let's compare this now with another sector. In 5G technology, a doctor stands in one part of the world and executes a surgery in another part of the world. So it means that it uses data that is stored locally and communicated internationally in order to execute that job. That's exactly what we do. We receive as much data from the source. We store it in order to do our own assessments, our own usage, our own compliance reviews, controls based on the local regulation. Then we transfer as much data required in order to execute the transaction that they instruct us to do it. So that is also based on the local regulation in the other side of the globe or wherever it is. So basically, to answer your question in a more compliant way, is that data is very much required for compliance and assessment of risks, especially in money laundering and counter financing of terrorism. But we get it, we store it, and we transmit it upon requirement and based on the transaction. That's my opinion.
Thank you, Christos. Ken, what are the trends in DIFC, DFSA when it comes to data protection, data privacy? Even DFSA has been very active in this space, coming up with new guidelines, regulations. If you would want to throw some light on where is DFSA looking at data and information now?
Yeah, so data, aside from the standard protections, our view on data is the data protection, we have the basic guidelines there. DIFC has the data protection law in place, but from a regulatory point of view, we look at the firms need to manage that as best works for them. And I raise this because the most common issue is the localization of data. And our view on this is store it where you can best control it and manage it. And if that's in the DIFC, that's in the DIFC. If that's in London, that's in London where you need it to be. And some of the issues that come up around that, which we're cognizant of, the more you localize data, the more you fragment it around the world, the more difficult it becomes in the event of, say, a cyber incident, for example. How do you manage a situation like that when you have centralized response teams, but now you have to deploy them into different jurisdictions because the data is in different jurisdictions. So there are issues that way, and from the DIFC's perspective, and DFSA, we're cognizant of that. So our starting point is we leave it to you to decide where is it best to manage that without taking a position that we think it's best that it be held within the jurisdiction. The other point that we make on that is wherever you're hosting the data, we as the regulator need to have access to that. So you have to protect that data, but you don't have to protect it, and you can't protect it so much that we can't access it. And that does lead a lot to the data localization, because that can be very difficult across jurisdictions. Different regulators don't want the data being taken out of the jurisdiction, sent to a different regulator. But that's for the firm. You have to understand, is that data that you're holding relevant to us? Those transactions that data is related to, is that related to us as a regulator? Can we get to it? So those are the views on data protection.
Again, specifically on AML side, right? There's also this global trend that we are now seeing common authorities coming up among financial institutions where they share the transactional data to get better understanding of the transaction and hence potential AML risk associated with any transaction. Netherlands did a fantastic one coming up with a transaction monitoring authority. I know South Africa has been thinking of one for quite some time. Is that something we will see here? I mean, we have seen Credit Bureau, but would be good to see something on this side as well. Is that something in even thinking, making at all?
From the DFSA point of view, I'm not aware that there's any particular thinking on a centralized body to do that. Whether that's happening at another level, that may be, but that does raise a number of questions around shifting of responsibility and liability around the data protection for that. I would be, I would think we would be a bit cautious about moving into that space of being the central holder of that information, because that does carry a whole lot of new liability, and someone who's more legally trained than me could probably list a whole list of concerns around the liability that would create. No, at present, I'm not aware that we're having any discussions around moving into that particular direction.
And Antoine, Sach, have you seen any such trends globally in any other regions, countries that UAE can learn from?
Sorry, just to catch up, is this on the data side of things? Just because I fell behind.
No, this is on the fact that there could be common authorities or common organization co-owned or owned by government, which acts as a utility and then essentially shares the information among the financial institution, which in a way helps them fast track and get a better hold on the analysis that they are doing, rather than simply relying on information, which is typically through one source, which is the customer himself, right?
Sure. This will bridge on the previous questions with regards to data and GDPR and what have you. We have two segments of customers here, the business entity and the consumer. They are two separate. So GDPR, data protection applies to consumers, does not apply to business entities. Everybody has to get this right in their mind. And privacy laws of the IFC, I'm pretty sure they are very similar or in line with GDPR, which is same as what we had before in the ISO 27001, same as we've had it before that in data protection acts in the UK since 1997 in the EU countries. There is a big resistance against having centralized depository of personal information on consumers by, in particular, EU consumers. Nonetheless, if the information is used and utilized in accordance with the GDPR or the equivalent laws of it in that jurisdiction, then there shouldn't be a reason why not to use it for such a thing. But obviously this carries with it other risks. There's security risk, okay? Because then all that information is held in one place, then the hackers will target that place and will try and get that information from that place too. It's very risky, to be honest with you, for anyone to hold such information, even government entities. We've had it before where voters' records in certain countries were hacked and total population's data were obtained. So governments have to take that really into consideration, not just the security, anonymization, splitting the information, silo the information, and so on. And how can that information be transmitted and by whom? Accessed, verified. Accessing it is one thing, verifying it is something else. For the
you have thrown a very good light on a topic which I want to take as the next topic almost at the end of our discussion. But with all these fantastic talks about client onboarding, digitization, everything, there must be some challenges. There must be some risk. New risk that we don't know from the past, right? So as you just mentioned, probably data secrecy and leakage is potentially one, but are there other risks? And I would like to take this question to each of the panelists as one of the last questions to understand their views on challenges to customer onboarding going fully digital. Antoine, you first, and then we'll move to Sach and then onwards.
Okay, so I understand there will be like two parts to the question, the risk part and the reward part. So if I address the risk part of it, There is always a fear from a few companies, specifically in the financial industry, for example, to outsource particular or fully their compliance process, particular aspects of it or fully, or even to automate it, like a discussion was leading earlier. Some companies or entities or businesses will be too worried about automating the process. Let us not forget that financial institutions and entities are highly regulated, and the potential fines are increasing drastically. And we've seen some examples in the UAE recently. That is the reason why we at Cedar Rose offer a flexible and customized service to our clients. We're not only a service provider, we are a partner. We use a consulting approach to advise what we believe is best fit to manage their needs and expectations. Eventually, they are the decision makers, but they know they can rely on our 25 years of expertise and experience in the domain. On the reward side, RegTech companies, if I can include Cedar Rose, for example, as one, are experts in the field. They have the knowledge, the data, the expertise, even the technology. If we share these strengths with the financial industry, you can only benefit from a better experience, not only in terms of consumer satisfaction or customer satisfaction, because the onboarding process became quicker and more seamless, but also from the internal point of view of a business. It means for them less time spent, less resources, less operational costs. It's a win-win situation for both the financial entity and the end client, the customer.
Thank you, Antoine. Sach, your views,
Yeah,
what are the real challenges? Everything is a reward. I need to know the risk.
Well, I mean, I think Antoine sort of touched on this, right? So I think every field that goes through a disruptive process, it's going to create new risks. It's going to create risks that people didn't consider earlier, that people didn't see earlier, etc. I think this is where some of the guidance that the likes of Lawrence and Ken, etc., are provided from a regulatory perspective. Say, actually, you can do this, but here's the guidelines, here's the rules that you need to operate in. And that goes in simple things like outsourcing, etc. That central bank has come up with guidelines around all of that. Now, that's not disruptive, but it gives you a bit of guidance around how to do certain things. And that's what's important for the banks. I think data is a critical thing. We talked about shared KYC utilities a number of times earlier on this discussion as well. I think there's about 3 currently being discussed in UAE or live in some sort of form. I know there's 2 or 3 others in the Gulf region, and there's plenty across the world. But these have been things that's been discussed for the last 5-6 years. SWIFT was discussing something like this about 6 years ago, 7 years ago now. It hasn't really happened because of concerns around data privacy, etc. I think there's problems like that to solve, but the advantages are enormous, right? You cut down on cost, you increase your the quality of your customer journey, you really make a difference and really focus on what's important and change the way how compliance is done and looked at. I think that will drive it forward, and this risk will have to be considered along the way. For me, the key risk is around data and how data is handled, etc. Having said that, to get a lot of the value on some of these innovations, it can't necessarily always be the data has to be in a particular place, because the efficiency comes from scale, and sometimes you have to sort of marry that with the risks of having data everywhere.
Thank you, Sach. Lawrence, your views. What are the risks associated with going all digital? New risks that we don't probably see today, or are emerging risk, as we say?
Yeah, look, I think the risks in terms of the digital transformation, I think are fairly well known, and it's just they've just become more heightened as we've seen, greater adoption of technology. And so operational risks in its broad sense is very much, the key sort of area, whether it's technology risk, whether it's outsourcing, cyber-related risks. And that's why, I guess, for regulators, we've very much gone back to our sort of principles around governance and, training of staff and allocation of resources, documentation, record keeping, understanding it. I think it goes back to that old adage with using third parties and outsourcing, that you can outsource the function, but you can't outsource the responsibility. And that's really something that lies in the heart of a lot of institutions that continually rely on third parties. And then I guess there's an emerging area for regulators, which we're always thinking about, is just concentration risk. Where are we seeing that evolving in certain third-party firms and certain areas that they provide, and what happens if a major supplier goes under, and the impact it has across a range of financial institutions.
Thanks, Lawrence. And Ken, on the same lines, right? Not just the major supplier. Sometimes you are experimenting with a new reg tech company or a new tech company, and then they just don't get funding after 1 year, and then you are back to square one. So how do you balance some of these emerging risks? Your views on emerging risk as well.
Yeah, so on that particular issue, you raised a new fintech. They don't get funding. The way we deal with that through sandbox programs is to reduce the amount of business, to control the amount of business they can do, to reduce the impact if they fail after 1 year. That's one way to deal with that. I think more broadly, we see with the development of a lot of these digitized models, the emerging risk is the scale of the error. When something does go wrong, and as we deal with this in the sandbox, is to control them. Yes. So on digital onboarding, by the time an error is discovered, potentially hundreds, if not thousands of clients could have been onboarded very simply. They could have done transactions, where with the human factor, you couldn't have done that much business likely before it was identified as a symbol. So I think we have a potentially much larger impact building up in the background before some of these issues are potentially identified. Data sources, where's the information coming from that providers are getting? Oftentimes it's not the provider that you deal with that captures the information. They're using another provider who's using another technology to capture it. So as you go through layers and layers of technology, your exposure is deeper than you realize that it is. And to each of those layers have safeguards in place that meet the base requirements of the original user of the first line of technology with the regulatory requirements they have to meet. So third-party risk management is very high on our risk register, and will be for quite some time, for many more reasons, I think, than traditionally thought of. It's not as simple as just understanding the risk that the immediate provider you are working with presents to you. It's all of the sub-providers behind them, and that chain is getting longer and longer and longer as things digitize more. Yeah.
Thank you, Ken. Christos, anything you felt any of our panelists missed as an emerging risk?
For sure. Regulations are clear, and they will always be clear what is required to be done, and they know more than us as practitioners of what is right and what is wrong. They are not based on short-term laws or regulations. They look forward. So that's the guidance from one side. On the other side, there is evolution of technology as tools. The risk that we have to do now is, or we have to identify and then assess, is how prepared we are as compliance officers to implement technology and digitization in order to meet the requirements of and the continuous evolving requirements and regulations that the regulators gives us as guidance in order to do our job. So for me, we use today currently all the available technology. We'll use robotics, we'll use artificial intelligence, machine learning, we use data capturing, digitization of data capturing, storage, we use blockchain, we use a lot of those automations that are current or will be available in future. But the risk of advancing and getting the hands-on in the compliance or within the financial services provider to move to the same direction and with the same speed as all these two go. And that's the biggest challenge that we believe that we professionals should aim at, and not just outsource or, I put this everywhere else and not me. No, I have to move even faster, because many times we are the drivers for the regulators to give us more clear guidance, and we are the drivers of more technology in order to be built, in order for us all to move fast together. That's for me.
Thank you, Christos. We have covered most of the questions that our audience have asked during our discussion, so there are no specific questions more to cover. But before I say goodbye to everyone, I'm going to start with Antoine, giving Christos a few seconds to think. One simple question, 3 words of advice that you would like to give to young compliance officers. But I'm very specific, only 3 words, no 4th word, yeah? Antoine, starting with you and then Christoph.
Thank you, Bhavin. Be very familiar and confident with your compliance processes. Make sure you are aware of the available technologies that can be used, because those technologies will come into your workplace soon.
Super, thank you. That went about 15, 16 words, but Christoph.
I will use 3 words: regulation, knowledge, and tools.
Awesome. Thank you. Ken, next is you. 3 words, advice to our young compliance officers.
Trust but verify.
Awesome. Sach? Sach, you are on mute.
Sorry, yeah. It's 4 words, but I would say be open and innovate.
Awesome. And last but not the least, Lawrence, your 3 words.
Regulations, culture, and learning.
Awesome. Look, with that, thank you all. It was a fantastic panel. And once again, Hitesh, thank you Wealth today for organizing this. And Antoine, Cedar Rose, thank you so much for sponsoring such a fantastic discussion. I think discussions like this are very important in our industry to share the knowledge, bring the right dialogue up, let it go to the right people where the change needs to be done. And I believe each one of us are change agent in our own way, right? In our respective organization, in the set of people we influence. And look, testimony of our discussion is that we still have about almost 122 people online listening to this discussion. So thank you so much, everyone. With that, over to you, Hitesh, for last words, and then we are off. Thank you, guys.
Thanks, Bhavin. That was a great interactive session. It was amazing. We at Wealth today thanks all the panelists and those who have joined today. A special thanks to Cedar Rose for sponsoring the session. Thanks, Bhavin. Thanks, everyone, for moderating it and amazing inputs. Thank you all. Signing off.
Thank you.
Thank you.